Good morning, coming to you live from the Nasdaq market site in Times Square. Welcome to Advisory Live. We're powered by Nasdaq IR Insight, and I'm your host, Will Briganti. And joining me today as my guest is Dan Ramito. Dan is Global Head of Investor Analytics at Nasdaq Advisory Services. Dan, welcome to the program. Great to have you here.
Thanks for having me. Good morning. Loving the mustache.
Thank you. Yeah, it's November here at Nasdaq, which means it's Movember, so we're excited to be
I think more than anything, I'm just jealous, right?
Exactly. Well, we're growing mustaches to raise awareness for men's health issues. But today, we're here to talk about the Nasdaq Investor Relations Forum that we're hosting here at the Nasdaq market site. We have about 50 investor relations professionals on site talking about a whole range of issues. But you're here today from Chicago to talk about the impact of index investing. So if I'm an investor relations professional, why is this topic important to me right now?
Yeah, I think when you're talking about index investing, it's very market cap specific. So this panel is geared more towards the small cap. So the way that index investing would impact a small cap clearly is different than a mid or a large or a mega. As it pertains to this forum, I think there's this misnomer or this concept out there that marketing efforts should be proportional to index investing, which clearly index investing has exploded over the last couple of years. So there's the mindset sometimes, right, not across the board, but there is a notion out there, well, do I need to decrease my marketing efforts? At Nasdaq, we're advising clients not to do that because there's a very artificial component to index investing. When we've had a bull market for the last 7, 8, maybe 9 years, index has to own you, so there's an artificial demand there. That artificial demand creates an artificial multiple. There will be a market correction, right? It is coming. It's not going to be the end of the world and the sky's not falling, but the market always corrects.
Of course.
And just as there's an artificial component on the way up, there will be an artificial component on the way down. And active value investors know that. Active growth investors know that as well. So the small caps, because there's far more of them than obviously your mid and your large and your mega cap companies, the ones that really get out in front of that and let active investors get them to understand their value proposition, the management team, they're going to have the leg up. So index investing is not sit on the sidelines and let the passive money do whatever it's doing. There's a very long-term strategic vision that you have to incorporate in order to be successful from a marketing standpoint.
Sure. So my last question for you is, if there's like one key takeaway that our guest investor relations officers that are here on site should take away from your panel, what is the 1 or 2 things that they need to take away from that?
Yeah, I mean, most importantly, I think one of the big aspects is if we were having this conversation 3 years ago, I think the ESG component and the index component.
So ESG, just for our viewers, is environmental, social, and governance, right?
Okay, so synonymous with SRI investing, socially responsible investing.
Yep.
I think 3 years ago, you could isolate those concepts on their own little mode. And now over the course of time, there's a clear convergence between the index mindset and the ESG mindset. And ESG, we joke with clients a lot, there's a redundancy there. There's E, the S, and the G. Small caps need to focus on the governance component, purely because of the run of the market. You've had market caps 3, 4 years ago that were 250 market cap. Today, they're 700, 800 million. Right, but their governance framework it resembles more of a 250 market, not because they're doing anything wrong.
Right, it's a resources thing too.
Exactly,
right?
Exactly. But I think the threshold in the small cap arena is far more smaller.
Okay.
Right, mega cap, you're a mega cap, but a 250 market cap is viewed upon completely different than a 500, a 750, and a billion. So a lot of these governance frameworks have to catch up because of the appreciation in the market. And index investors, they don't have the luxury of discretion, right? If there's something that they don't like about the company, they just can't sell it. They have to own it. But their manner of governing, or they're managing their portfolios via the governance portfolio. So if there's something that they don't like, it's via the governance route. They can change that through the proxy, right?
All right, well, Dan, we'll leave it there for today.
Perfect.
Thank you so much for joining.
I can clearly talk about this for days, right?
You definitely can, and I'm sure the panel's going to be great, so I appreciate you coming in.
I appreciate the time.
Yep, thank you so much for joining us on Advisory Live. And if our audience is looking for more information about our investor analytics division and more of the content that Dan and the rest of his team have published, be sure to visit our corporate blog. That's over at business.nasdaq.com. Thanks so much for tuning in to Advisory Live from the Nasdaq market site in Times Square. We will see you next week. Thank you. Thank you, Dan.
Thank you.
All right.